Hello and welcome to the deVere live webinar series. My name is Trayford and this is our 19th live webinar, and I'm here in our Shanghai office, and I'm delighted to say we're being joined by Keegan Grippo from deVere Mortgages live from the UK as well, and I'll introduce him in just a few moments. But let me first of all run through what the format is going to be today. All right, so first of all, we're going to get your opinion. We want to know what your current situation is and where you are in the whole mortgage process. So we'll be doing a poll to get your opinion. What we'll do after that is I'll be handing over to Keegan, and he's going to run through a short presentation, just give you a little bit of an overview on how UK mortgages work. And what we'll then do is I'll run through an FAQ, frequently asked questions, to Keegan, and to try and cover lots of questions. If you're in our WeChat group about the webinars, you'll see there's been lots of questions coming in. So I'll try to cover as many of those as possible, but I'm sure you'll also have a lot more questions as well. So what you'll see at the bottom of your screen is a chat box, okay? In that chat box, what you need to do is select all panelists and attendees, and then type in your question, and I'll then put those to Keegan after the FAQ that we do. Okay, so, and if you put all panelists and attendees, it means other people can actually see your question, and normally that sparks more questions and it creates a really good environment in the webinar. And then towards the end, hang around, because we'll also give you the opportunity to reach out for more information, either on property in general or mortgages or whatever it might be. Okay, so with that, what I will do is I will launch our first poll. So we want to know, why are you interested in UK mortgages? Okay, is it because you own a UK property already? Do you want to invest in UK property? Do you want to buy a home in the UK? Are you trying to remortgage an existing property in the UK, or is it another reason? So do you own a property, looking to invest, looking to buy a home, remortgage, or something else? And I will leave that poll up there for you to complete. So with that, Keegan, if you want to turn on your camera and your mic. Keegan is our top mortgage advisor in the UK, and I can give him a very glowing review because he's helped many of my clients out, and he's going to be helping myself out as well towards the end of the year too. So with that, Keegan, I'll hand over to you.
Thank you very much, and thank you everyone for joining. Absolute pleasure. Good evening to everyone. It's actually about 12 o'clock here, so I believe it's a little bit later over there. And yeah, thank you, Will, for the introduction. Today, really, what I want to cover briefly is an introduction to deVere Mortgages. Obviously, the main topic of this webinar is, can you get a mortgage in the UK if you don't live here, if you live in China or elsewhere in the world? So that's what we will cover, and the idea is to give you the confidence, really, that when you leave this webinar, you've got the confidence that it is the right time to buy, and I can help facilitate that purchase, or another advisor here at deVere Mortgages. So what I want to run through first with you guys is go through a quick presentation, tell you more about us, what we offer, how the journey itself works, and then of course what will happen is we'll come back and we'll do a Q&A and answer as many of your questions as possible. So with that being said, we'll just move on to and we'll move on. So who are we? So deVere Mortgages, obviously part of the deVere group. You'll know the deVere group, hence the reason you're on this webinar today. And we are a subsidiary of the group. We work under the group, but we are a separate business here in the United Kingdom. And the reason for that is because we are directly authorized by the FCA, which is really, really important. It means really that the mortgage advice you get, whether you speak to me or one of the other guys, it's above board, we're audited, and we're independently whole of market as well. So therefore, what it means is that we're not restricted by any panels. Any lenders that are out there that will lend, we can use them, and we have that authority to use them as well. So it's a really, really massive plus. We work with around 100 lenders. That's how many lenders there are in the UK for UK clients. And for expatriates, overseas clients, there's around 45 different lenders that we work with. So even being overseas, there's a massive pool of choice. And again, we can use all of them because we are directly authorised. And actually, for some of those brokers, we are some of those lenders, we are their #1 broker. So, and we've helped develop products with lenders. So our experience in this field is second to none. We are one of the biggest expat brokers out there in this country. And what we can offer, again, because of the direct authorization by the FCA, we're not limited to what we can offer you guys. So buy-to-let mortgages for investment properties, or a residential mortgage if you're looking for a property to use as a UK base, that is something that we can offer. Purchases and remortgages, so remortgaging and capital raising for further investment purchases or any other legal means. We can take equity out of your current property if that is what you are looking at doing. Bridging finance and short-term lending. So sometimes you want a loan, but you don't want it for 20 years. You might only want it for 6 to 12 months. That is something that we can facilitate. And we do holiday lets, Airbnbs, and development finance as well. And any of these mortgages are available both on interest only and a repayment method, which I'm sure we would talk about more directly with you as a client if you were interested in speaking to us, and how different kind of mortgages work. And I'm sure we'll ask some questions around that later on. And finally, there are investment opportunities under limited companies as well. So if you are thinking of buying a number of properties, maybe 3 or 4, and this is a long-term strategy to build your portfolio, you may consider wanting to do it under a company structure, and that is something that we can help facilitate. In terms of the journey itself and how we work, it's a very simple process. It's exactly the same process you would get if you was sat right here in the United Kingdom. And essentially what we do is I would be, or another mortgage advisor, we would be your dedicated mortgage advisor throughout the whole process. So you have one contact, you're dealing with one person. And the first point of the process really is for us to get an understanding of your circumstances. What are you looking to achieve? What are your circumstances? Are you working? Are you not working? Where do you live? What type of property you're buying in? And we collate all that information and we put it out there into a fact find. And that enables us to then go out to the market and do the whole of market research. So whereas you are overseas, we would go out to all 45 lenders. We would speak to each lender individually, and we would then determine which ones are willing to lend you the money that's required for your purchase. And once we then agree together which option is best for you, which one provides you with the preferences that you require for your purchase, then what we would do is we would obtain an agreement in principle from that particular lender. And that's basically where a lender's saying, yes, as long as this client can prove how much they earn and they can prove their identity, then we're happy to lend them the money. And then at that point, we would put in the full mortgage application, and then we do the underwriting with the lender. And we do all that work on your behalf. Getting a mortgage in the UK, it's a little bit easier for me than it might be for you, especially being overseas. And it's not always straightforward. And that's why we're here to deal with the lenders and deal with that communication so you don't have to. We have the relationships that are required to make this a smooth journey. And then as soon as the mortgage application is in and the lender has looked at all the evidence that we've provided and they've said, yes, everything stacks up to what you've told us, they'll do a valuation on the property. And once the valuations come back, they will then issue a mortgage offer. And at that point, it's then down to the legalities of purchasing a property in the UK and the solicitors to get that purchase completed and get you onto the property ladder. That's kind of in a nutshell what we do, what we offer. I think what's really going to be important here is the Q&A with Will, and what I want to do is answer as many of your questions as possible. What I don't want to do is rabble on about what we offer. I think what's important is giving you the confidence to go away and think, yes, I'm confident I can get a mortgage. I want to discuss getting a mortgage and investing in the property. So that being said, what I'm going to do is let Will come back on the video call, answer whatever questions you guys want to ask. I will give you as many answers as I can, and hopefully you'll leave this with some confidence.
Excellent, thanks, Keegan. Just want to stop sharing your screen, and then everyone will be able to see both of us. Nice big screen. Excellent. Yeah. So so what we're going to do first of all is I'm going to try and run through some frequently asked questions.
Sure.
And obviously, let's assume the person is in China, because most of our clients are here in mainland China. So one of the common things they get asked is, okay, so do I need to have a certain amount of salary? What level does my salary need to be at? Is there a minimum amount they need to be earning on a yearly basis or monthly basis to even start the conversation about getting a mortgage?
Sure. Most lenders will have a minimum. It can vary, but the lowest usually is around £25,000 sterling equivalent. So whatever you're earning, convert it into sterling. If it's £25,000 above, then absolutely fine. The higher the salary level, the more lenders there are available. So it does come down to levels of income, but really I would say 25,000 is a really, really good starting mark. There are lenders out there that will potentially, if you are, let's say, a new business person, you are self-employed and you've just started a new business and you've not necessarily got that income history, there are lenders that will potentially look at the case and they'll look at kind of what else is in the background in regards to personal assets and experience. But for a standard kind of investment purchase, £25,000 is where I would say is really the minimum starting mark.
Okay, and is that the same for UK nationals and for non-UK?
Absolutely. So whether you're UK national in China or whether you're a different nationality elsewhere in the world, £25,000 would be where I would sit comfortably to say yes, absolutely, we can assist you. So when it comes to the income level, it's the same for all nationalities in all countries.
Okay, great. And then on income, so a lot of people here get paid just in RMB, so all their money's getting paid into a Chinese bank account. Sure. Is that an issue, or is there anything people need to be aware of around that?
No. So with the income, again, it comes down to the conversion. So you've got to be aware of the conversion. As long as it converts to the UK sterling, £25,000 equivalent. Essentially, if you're buying an investment property, the rental income is going to pay for the mortgage. So the lender will actually use the rental income usually to determine how much someone can borrow. The income is a kind of background check for the lender to say, well, if there was ever a void in the rental income, so if a tenant moves out, for instance, and you cannot find another tenant for a couple of months, which happens quite regularly, that client has enough income in the background to be able to cover that void in rental income. But the currency is absolutely fine because the rent will be paid in sterling. Okay,
excellent. And then what's the typical loan to value? I'll just quickly do for people that are not sure what that means. Essentially, loan to value is the amount or the percentage of the property value that you can borrow from the bank. So if it was £100,000 property and the loan to value was 70%, you would be borrowing from the lender £70,000. and you'd be putting your own money, £30,000 as the deposit. So what's a typical loan to value that expats in China can get?
A lot of it depends on the property you're buying, but if we talk about a standard purchase, 75% is the maximum. So if it was a property valued at £100,000, then £25,000 cash would be put in by the client, and then £75,000 would be raised by the lender. What I would say on that is that the more money you can put in, the more choice you would potentially have. Certain lenders can max out at 65%, some at 70%, but the maximum we can raise is 75%, and there are plenty of lenders for clients in China, non-UK nationals, that will go to 75%.
Okay, so even for non-UK nationals, it's possible to get 75%.
Absolutely, yeah, correct.
Okay, excellent. And then is that a moving scale? Would that depend on income as well? Is that kind of a linked thing, or does it change if someone's saying, we're kind of making assumptions about buy-to-let properties, but would it change if it was for a residential property? Would those percentages change at all?
Absolutely. So with a residential property, so somewhere that someone's going to use as a UK base, or they're going to move back to the UK, it actually goes up to 80% with certain lenders. So you can get an extra 5%. What I would say is, of course, if you are going to do it on a residential basis, you cannot make income from that property. You will not be allowed to rent the property out. It will remain empty. So 75% buy-to-let, 80% if it's going to be a UK base for residential purposes is where you are at. Again, the more deposit you can put in, the more choice that you will have, essentially.
Yeah. Okay, excellent. Is there a minimum amount that people need to borrow?
For most lenders, £100,000 equivalent. That will open up pretty much most of the market. There are lenders that will do less, around 75,000. But I would always base it on borrowing £100,000. So at a loan to value of 75%, you're looking at a purchase price of around 130, 140 in order to make the figures fit. So I would always use 100,000 as the minimum where possible, but we can go lower if we needed to.
Okay, excellent. So we've covered if paid in RMB. So we've had so many questions come in, and just on that, if anyone's not in the webinar WeChat group, do reach out to whoever invited you and get yourself in that group. It's been buzzing away, and I know it's been buzzing away even while we've been talking. So,
okay,
and
sure.
we won't be able to get all these questions in, I'm sure. But there was one from Sarah. So, are there separate regulations for UK citizens living outside the UK? Obviously, compared to if they were in the UK, what's the main differences, I guess?
There isn't. So being FCA regulated, if you buy a property to live in, even though you are an expat, essentially the property is still in the United Kingdom, so it still falls under the United Kingdom regulations. So a full residential purchase would be regulated as if you were sat in my office right now. It would be exactly the same. When you purchase properties for investment purposes, these purchases are actually unregulated. They're not regulated by the FCA at all. And that's the reason they're investments. You're taking a risk by putting the money in, hopefully for gains later down the line. But if it is a residential purchase and it's a property that you are going to use as a UK base or one day move back into, it's fully regulated as if you live in the UK. So there's no difference at all.
Okay, excellent. So a question from Ian. So how are banks' appetites for lending currently? Have the requirements for expat mortgages changed since, say, last year?
Sure. So obviously we're in the middle of a pandemic. There has been changes since, if I go back to March before the lockdown, since then there has been changes, but actually some of them are really positive. So At the moment, some of the lenders are out of the market. They are still remaining, and that's not just for expats, that's just in general. They are small, independent lenders that at the moment, obviously, staff are on furlough, and raising funds is not as easy as it was. So there are certain lenders that have just not come back to the market. But actually, for the most part, most lenders are now back. It's exactly the same as it was pre-COVID, pre-March, but rates have gone down. Rates have decreased in line with the Bank of England base rate drop. We have seen a number of lenders reduce their rates. Some lenders have slightly increased their rates to protect their margins and to protect them against any future kind of drops, if you like. But ultimately, it's business as usual. Rates have slightly decreased. Most lenders are back to the levels that they were at pre-March. So the appetite for lending is absolutely there. In fact, it's one of the busiest periods, the mortgage market, and not just us here at deVere, but in general. It's one of the busiest periods we've seen. And of course, you've got the stamp duty holiday, which is affecting that as well.
Yeah. And talking about that, I mean, if I could get you to look into your crystal ball for a moment, how do you see the mortgage market and perhaps touching on the property market in general over the next, I guess, 9 months for mortgage holiday, but also, a couple of years down the line as well, maybe? Sure.
Look, do you know what? It's, up until June, the mortgage market, it dropped. It was about 1.7%. I think it was 0.1 for the year. And then in June, the whole market crashed to like 1.6%. It doesn't sound like a crash, but it is in the UK housing market. In July, it bounced straight back. It went back up 1.7%. The market is really, really buoyed at the moment. It really is. And that is thanks to this stamp duty holiday, which you've got. Before this stamp duty holiday was announced, we would have assumed really that your high-end purchases around £500,000 plus, they really we wouldn't have seen as many of those happen, because people are worried about jobs, people are worried about what's going to happen on the kind of coming out of this coronavirus. As soon as the government announced the stamp duty holiday, it's just turned on its head, and actually it's probably in its healthiest position it's been all year at the moment. Over the next 9 months, look, I have, like you said, I haven't got a crystal ball. Do I think there'll be a drop in the housing market? Yes, I do initially. However, what you have to look at is when you're doing an investment property, certainly overseas, is that this is a long-term investment, and you have to look at it as a 15, 20-year investment. And to give you an example, when the market crashed in 2009, house prices in March 2009, the whole thing dropped, I think it was around 16%. Since then, since 2009 up until 2020, the house prices are actually 25% up. So in 10 years, the housing market has increased 25% on average house prices. So you've got to look at it long term. Yes, there'll be an initial dip. I have no doubt about it. I don't think it'll be a huge dip. I don't think we're talking 10, 20%. I think it'll be more 5. But it will come back. It always does. And the reason for that, Will, is the supply in this country is not enough. The demand always outweighs the supply. And really, we just can't build fast enough. That's the number one issue. We just can't. And secondly, we're one of the kind of quickest growing populations in the world, and we're probably one of the smallest islands in the world. So the only way, we can't carry on building out, we're running out of land. So the only way to build now is up, and it takes time. We can't get them up quick enough. So the rental market is huge at the moment, especially in the north where I am. And I think that is what's going to keep the housing market going. I really do. So I think you'll see an initial dip, but nothing too extreme.
Yeah, I completely agree with you. Completely agree with you.
Yeah.
And it's really positive to see. I think the sign of lenders coming back to the market and being buoyant and being positive is usually a good sign for the market in general, isn't it?
Yeah, absolutely. And you'd be surprised. We didn't really see that many drop out, to be honest. What tended to happen was, rather than lending 75%, they came down to 65%. So all they did were reduce how much they would lend. Some of the smaller lenders that we work with that, are really independent lenders, they're the ones that we have seen just hold off a little bit. But the main institutions and the main kind of big lenders that we work with, they never really went away. They were just really selective on what they would lend and how much they would lend. But now everything's pretty much back to normal, and everything's business carry on as normal.
Excellent. So a question that's come in from John. What is the mechanism to prove your salary?
So two ways normally. Pay slips is the first one. So just like in the UK, most lenders will ask for the latest 3 months pay slips. However, the lenders we work with, and of course the relationships we have, we are aware that sometimes, and we do see this a lot in China, pay slips are just not available. It's just not something that is given out. So therefore, we would normally request a letter from the employer, which confirms things like job role, what date you started, and what your salary is. And for most lenders that we work with, that's enough because we can match it up with the bank statements to show you salary payments going in. And therefore, the employer's letter and bank statements is enough. But pay slips is kind of preferable where they are available.
Yeah. Okay, great. Another one from John. So if you're planning a holiday let property, would you advise a buy-to-let mortgage?
No, they are two separate things, and there's a reason for that. A buy-to-let essentially will go on to what's called an AST, an assured short hold tenancy, and that's where someone is constantly in the property. It's the same person. They've signed an agreement for 6 months, and it will rent for £600 a month, for example. A holiday let is different because you've not got the same tenants. So 1 week it might be fully booked up, and the next week it might not be. And also, of course, you may get different amount each month because it's very seasonal. A holiday let, from kind of June probably to September, you will be very, very busy. You'll make a lot of income. You might, sell it for £400 a weekend. But then when you get to the kind of winter side, you're not so busy. So it will go on a completely different mortgage. It will go on a holiday let mortgage. There are lenders that do it, and we can assist with that. But it will come down to other factors as well regarding the client and experience. But it is something that we can look at for you.
Okay, great. Matt's asked, what kind of interest rates are available for buy-to-let mortgages? I assume for expats.
Yep, sure. Completely depends. There's a number of different factors which determine which lenders we can go to, and of course, different lenders have different rates. So, as a general rule of thumb at the moment, for anyone overseas, regardless of whether you're UK or non-UK, you are looking anywhere from 3.5% to 5%. And I know that sounds a big spectrum, the 1.5%, but a lot of it does come down to individual circumstances. So income, where you are, nationality, what you are looking to purchase. Are you a first-time buyer or are you an experienced landlord? But the cheapest fixed rate is 3.5%. The highest is 5%. There are potentially cheaper lenders out there on variable rates. So if you're happy to look at a variable rate and kind of take the gamble of the rates not increasing, then there are rates around 2.9, 2.8.
Okay. Are you seeing a change in what's been offered to expats in recent years? Is it getting better? Is it improving for expat mortgages in terms of the mortgage market?
Yeah, so what we're finding is more lenders are coming to the market. If we go back 5 years, when deVere mortgages started, I think there was around 10, and we're now at 45. And the reason for that is it's such a kind of, what would I say? It's a market that's it's expanding. More and more people in the UK are going overseas to work. So for the lenders, and of course, rightly or wrongly, lenders can charge slightly more on the interest rate because you're overseas and they're taking more of a risk. So therefore, they can kind of charge slightly more as well. So we are seeing more and more lenders come to the market. And this is where kind of we come in, and we've designed products for certain lenders because they come to us and say, look, we want to enter this market. We don't know how, we don't know what other lenders are offering. Give us the advice, tell us what you would want from a product and what would sell, and we will put it together for you. So we have many exclusive products with lenders that are not available to any other broker in the UK. And that's purely just because of our kind of expertise in this area and the relationships we've got. But it's certainly starting to get more and more popular, and more lenders are starting to come into this market.
Excellent. I wasn't aware of that about exclusive products. That's good to know.
Yeah, absolutely.
So Alan's asked, are we looking to remortgage next year and move from interest only to interest and capital? Am I better off paying down some capital up front, or start from the level of lending I currently have?
Entirely up to you. I would say if you've got the capital, essentially with a capital and repayment mortgage, excuse me, the more you owe, the higher monthly payment. Obviously, the longer you have the mortgage, the more interest you pay, and of course you're always paying interest on the balance. So if you can reduce that balance before remortgaging, then of course it's going to reduce the interest you pay in the longer term. So I would say, get your monthly payment budget. How much do you want to pay each month? You want the rent to cover the mortgage payment, I'm assuming. You know, you don't want to be paying out of your own pocket. That's what an investment property ideally is for. But I would say get yourself a budget that you're happy to pay each month. Speak to a mortgage advisor, and they can tell you exactly how much you need to be borrowing to fit your budget. And if you have the additional funds to put down, then I would say you're better off doing it at that point. And then reducing the balance, and it's just going to save you a lot of money in the long run, especially on the interest as well.
Yeah, for sure. So Neil's asked a bit of a strange one. So, how can expats paid in RMB send money home that satisfies money laundering requirements? Can I use relatives to send money home and use it for a deposit?
Sure. So in terms of the deposit, the solicitors will always do anti-money laundering checks, always. So what would happen is, even though you paid in RMB, fine, it will go through an FX, foreign exchange, and then essentially the solicitor will ask you to pay the deposit directly to them. And what they will do is, the solicitor, because they have to do anti-money laundering checks. It's obviously part of their protocol. They essentially will do their own checks. Where has that money come from? The alternative way, of course, is get the money back as quickly as possible. And if you are thinking about purchasing, and let's say the property is not ready for another year, well, that's fine. The money's just sat in the UK anyway, and when the time comes, you can just obviously pay it over to the solicitor. But there's no issues with sending any currency back to the UK, because by the time it hits the UK, it's already in sterling, because it's gone through the foreign exchange, and the solicitors will basically just check the trail. Where's it come from? How have you transferred it back over to the UK? And then they will sign off to say, yes, we're happy with the money laundering regulations that they've been passed, and it will just go from there. So there's no concerns or issues there.
Okay, excellent. So I'll just actually release the results of the poll that we did.
Sure.
So the top one, 50% of people are interested in a UK mortgage to invest in UK property.
Yeah.
More than one. Some already own, some to buy. Is that is that common? Is that the majority of expats that you deal with are looking to invest, or what's most of your clients?
Yeah, absolutely. I mean, most mortgages we do, I would say out of every mortgage we do, probably 80% is investment led. And the reason is, look, you know, most expats from the UK have gone overseas. Generally, we find to earn more money, see a bit of the world, and they've earned this extra money, and what they want to do is invest it somewhere. It's not getting anything in the bank, you know, and if you kept it in a UK bank, it's not getting anything. What's one of the best performing assets? UK property. So we do tend to find that investing in UK property is a very sturdy investment, and that's the reason that people do it. What we are seeing a lot of at the moment is actually remortgaging existing UK property in order to purchase further property. And the main reason for that at the moment is the stamp duty holiday. It is saving people thousands, you know, and I imagine between July and March next year, it will have cost the government billions upon billions of pounds. There's massive savings to be made. Obviously, taking money out of an existing property, you don't have to pay any stamp duty. You literally just pay very minimal legal cost, and I can get your cash out for you to then invest in further property and expand that portfolio. So that's at the minute, that's probably the most popular thing that we are doing, the remortgaging to further invest. But very rarely do we get many clients say that want a UK base as a lock and leave, because they don't come back. You know, most are out there for a number of years, whether it be China or the Middle East. They don't want a property to come back to once a year and leave it sat empty. So we tend to find investment is the way to go.
Yeah, absolutely. I'd say that's the majority of inquiries we get talking about mortgages is exactly the same thing. So excellent. Thank you so much, Keegan. And obviously, guys, there's been a lot of information, but also I think throughout it's always been down to your individual circumstances. What is your situation? What is your income? What are your assets? And that's what a mortgage broker needs to understand. And then they can start to put it together and say, okay, what's going to be the right kind of mortgage, or can you get a mortgage at all? And then you can start looking at things like investing into properties as well. So what we're going to give the opportunity to do now is to get more information about getting a UK mortgage or investing in property in general. So if you would like some more information, just let us know how you'd like us to contact you to get you that information. Is it via a phone call, WeChat, an email, video call, or visiting our Shanghai office? Just choose one of those options and we'll make sure that we get that information out to you. And if you're lucky enough, you may even get to have a conversation with Keegan at some point as well. So brilliant. And with that, Keegan, I'd just like to say thank you so much. Excellent, loads of questions. We may actually have some more coming into our WeChat group, which I might email over to you later as well. But thank you so much.
Of course. Happy to help. You're welcome. Thank you. Have a great evening.
Keegan.
Cheers.
And thank you all for attending and joining our webinar. And as I said, with that WeChat group, please just respond to the person that invited you to the webinar. I've seen a couple of comments come in. I'll try to track those back. But if you can reply to that email that invited you with the Zoom link, then what we'll do is we'll get back to you with that and get you into the WeChat group. We've got lots of webinars happening every couple of weeks. And also, thank you so much throughout this webinar series. We've been supporting Give to Asia as well with the pandemic response. So thank you so much for all your donations there as well. So with that, I'll close out the webinar. Thank you. Goodbye.